Hi there, this is Student Guide Live and we will be discussing the scope of total income. This concept explains which income will be included in the computation of total income of which assessee. It means income tax divides income as well as assessees in different categories. If we write different categories of income in rows and assessee in columns, then we will get a grid or a table consisting of multiple cells. Each cell represents a unique combination of income and assessee. Section 5 tells us how to deal with this unique combination appearing in each cell. It means same income for one type of assessee may get included in his or her total income, whereas it may be excluded from the total income of another assessee. Thus, Section 5 tells us the scope of total income of each assessee. Let us now understand classification of income for the purpose of Section 5. On a careful reading of Section 5, we can classify income in 8 categories as follows. In this classification, the source of income, the nature of activity resulting in income, etc. are not important. Instead, the place of receipt or accrual of income is important. You can see the 8 categories of income on screen. Income received in India means that income which is received in India. Its place of accrual may be in India or anywhere else. Income deemed to be received in India means that income which is assumed to be received in India. Section 7 deals with this type of income. It is that income which is not actually received in the relevant previous year, but it is credited to the account of the assessee during the relevant previous year. For example, amount credited to the statutory or recognized provident fund account of the employee. It is credited in the current previous year, but the employee does not receive it in his hands for spending immediately. Therefore, it is called as deemed to be received. Income accrued or arised in India is that income which is earned in India. Its place of receipt is immaterial. Generally, an income is treated as accrued in India if the activity of earning the income is conducted in India. Section 9 deals with income deemed to have been accrued or arised in India in detail. Here, prima facie the place of accrual may appear to be outside India, but due to applicability of provisions of Section 9, it is assumed to be accrued in India. It is covered in our point number 4. First 4 categories cover those income which are either received or deemed to be received or accrued or deemed to be accrued in India. From 5th category, we move ahead to those income which are neither received nor accrued in India. These are received as well as accrued outside India. These income are further classified in 3 categories. That income which is received outside India, accrued also outside India, but it is the result of a business controlled from India or a profession set up in India. The difference between business and profession is very thin. We will discuss it later while discussing Section 28. At the moment, we can keep in mind that income tax differentiates between business and profession. The next category is that of income which is received outside India, accrued also outside India, and it is the result of a business controlled from outside India or a profession also set up outside India. Second last category is of that type of income which is neither from business nor from profession, and which is further received outside India and accrued also outside India. An example of this can be interest or dividend received in foreign country from investment made in foreign country, or rent received outside India from a property situated outside India. Last category of income is actually referring to savings, since it talks about income which was earned in any year preceding to the relevant previous year and it is brought to India now during the relevant previous year. Thus, based on place of receipt or place of accrual, income is classified in 8 categories, which will become 8 rows in our table of Section 5. We have seen in the earlier discussion that income is divided in 8 categories based on the place of receipt, or accrual of income. Now we will discuss the categorization of SSE. Based on residential status, SSE can be divided in 4 categories, namely resident, resident and ordinarily resident, resident but not ordinarily resident, and non-resident. But section 5 prescribes same treatment for resident SSE and resident and ordinarily resident SSE. Hence, for the purpose of section 5, that is scope of total income, we will combine these two. Accordingly, SSE will be classified in 3 categories. The first category is of resident SSE, or those individuals and HUFs who are resident and ordinarily resident. Second category is of those individuals and HUFs who are resident but not ordinarily resident. Third category is of non-resident SSE. We will display these 3 categories by way of 3 columns in our table of scope of total income. Based on section 5, we have divided income in 8 categories and displayed these 8 categories in 8 rows. Then we divided SSE in 3 categories and displayed them in 3 columns. Thus, our table of scope of total income is created with 24 unique cells. Let us now ask one question every time in each of these 24 cells. And the question to be asked is, should we include this income in the total income of this SSE? The table given on the screen gives answer applicable to each cell to this question. An analysis of these answers reveal the following. For first 4 types of income, that is received in India, deemed to be received in India, accrued in India, and deemed to be accrued in India, irrespective of residential status of the SSE, it will be included in his or her total income. As we go to the next categories of income, the answers start changing. In case of a non-resident SSE, any income other than first 4 types will be excluded from his total income. In case of a resident but not ordinarily resident individual or HUF, any income other than first 5 types will be excluded from his total income. In case of resident and ordinarily resident individual or HUF, and in case of every other SSE who is resident in India, except the last income, that past income repatriated to India in RPY, every other income is included in his total income. With this, we come to an end of our discussion of scope of total income under section 5 of the Income Tax Act. Thank you for watching the video. I'll recommend you to write down the table and check the website for additional material on this subject. It will be updated from time to time.